Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the global markets are having a very busy week as the US dollar declines further and now in bearish territory after taking out the level of 100.50. The market was ignited to the downside after headlines showed that the US consumer price rose modestly in June and dropped to a two-year low. According to the US Labor Department, the consumer price index came in at 3% in June, down from 4% in May and just 1/3 of what was at the same time as last year. It was much lower than the 3.1 forecast as well. So the lower than expected data has now underscored the market's expectation that the US Federal Reserve may let July rates slide and potentially see another pause like June. If so, this would push the rate decision to September with a 25 basis point rate hike. Looking at the market, well, since the break of that 60-day moving average, along with that, a close above 66.1995, the market is ignited higher and now very much on course to 69 cents and reassess from there. We're getting a little bit overbought, but still technically everything has firmed up relatively well to support the upside case to 69 cents and reassess. As I mentioned, the dollar index, which measures the greenback strength against a basket of six major currencies, crushed this level of 100.50 and now puts a trajectory of 97.50.80. This in turn puts the euro on a path that could see the market head on towards the region of 112.40.60. A very strong pattern coming in here, but we are overbought, but the ADX is supporting the trend. And with the dollar breaking down further on the back of the recent CPI data, any pullback should be shallow. The dollar yen case, well, the market has plummeted further and now heading very much to the target of 137.15.25, which is close. With that being said, do be on your guard because the market is extremely oversold. And I do feel that the lack of trend on this bearish decline, that is, the market may actually find a bit of support getting closer towards this level. It all depends on 137.15.25 because a break there would give further scope to the downside and leave an opening towards 134. But one step at a time and see how the market finds that level at 137.15.25. Any rebound looks towards 139.45 as a potential target. Sterling, well, the market has reached its objective of 130 and still not showing any pullback. All eyes look to the UK GDP later today, but still with this very strong case in play here, let's see if the market can reject the 130 figure 25 area. If not, then we may be looking up towards 131.25.35 as the market squeezes higher. With the dollar sinking, gold's found its path back to the upside, now looking towards the region of 1,964 to 66. I'm very cautious of any bullish calls beyond there due to the fact is that we've already made our mark from the rebound off the lows of 1,900 and getting very close to that top side, which is seen somewhere around 1,980 to 90 area. It's a little bit late, I feel, to start thinking about getting bullish up here as a rejection can see the market drop considerably as we've seen in the past. So I'm a little bit cautious on any real strong calls at these current levels, other than the fact is I still feel the bears are lingering. Wrapping up with oil, well, the market's still in an uptrend and still supporting since the break of $74 a barrel and therefore looking up towards the region of 78.10.30 as an objective. Any pullback likely to be shallow, but with a trend relatively strong. A little bit of divergence there, so I'll still like to feel that the market will probably buy on dips and therefore look towards that top side. And with the support seen now at 73.80.90. Well, that's a wrap. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.